$15.7 billion in cash handed to Unilever. It's the ultimate corporate mic drop.
You just love the advisory fees. I read the McCormick breakdown and the math is weird. Unilever gets 55.1%, McCormick gets 35%. Where is the missing 10%?
Oh, come on. They'll structure it out. It's a brilliant play for scale.
And a regulatory nightmare, mid-2027 to close?
Fine, that if you want a fast close, we can talk about private equity just buying assets from themselves.
The great escape. Let's look at EMG's $5.5 billion loophole first. The rundown.
So Cross Country literally just walks in, drops $10.80 a share on the table, and blows up the whole marriage.
I mean, Two Harbors wasn't going to leave that kind of money sitting there. They officially terminated the UWM deal this morning.
You have to love a good broken heart breakup fee. Speaking of walking away with cash, we need to talk about Energy and Minerals Group. $5.5 billion for a continuation fund.
To acquire Ascent Resources from themselves.
Exactly. People are calling it private equity's great escape. The IPO market is tight, M&A is choppy, so sponsors are just passing the asset from their left hand to their right hand to generate liquidity for LPs. It's brilliant.
Brilliant for who? The bankers? Come on, Nate. I read the filings on these continuation funds. Half the time, it's just a vehicle to lock in another decade of management fees while avoiding a real market valuation.
Oh, you're so cynical today. If the LPs agree to roll over, they clearly believe in the upside. Ascent is a solid asset.
They believe in not taking a write-down. But fine, let's look at a real cash deal. Primoris Services is buying PayneCrest Electric, $422 million, all cash.
Data centers.
Exactly. Everyone wants to talk about AI chips, but nobody thinks about the guys actually wiring the buildings. PayneCrest gives them massive electrical capabilities right as the data center market is exploding.
See, that's a real picks and shovels play. I like it. Way better than Crown Reserve.
Don't even get me started on Crown Reserve.
I have to. A SPAC in this economy? Merging with Carvix for $1 billion? I honestly thought we left SPACs back in 2021 with bored apes and zero interest rates.
The zombie SPACs are still out there, Nate, just wandering the earth looking for a target.
Fair enough. Before we move on, keep your screens open for Worthington Steel and Klockner. Worthington officially crossed the minimum acceptance threshold.
And the window is staying open until April 14th, 2026. That's plenty of time for stragglers.
All right, wipe the slate clean. We need to talk about the monster on the desk. $15.7 billion in cash, and Unilever spinning off its food business to McCormick.
A massive global food giant, completely wild deal structure, and Unilever shareholders walking away with 55.1% of the new entity.
I've got the deck right here. We need to tear this apart. The big one. You look at your pantry right now, and it is basically just a holding company for this new entity.
I'm looking at the $15.7 billion cash payment Unilever is walking away with, and wondering who exactly negotiated this for McCormick.
Oh, come on. They are creating an absolute juggernaut. You combine McCormick's total dominance in spices and flavorings with Unilever's food brands, and you own the grocery aisle. It is a brilliant scale play.
Unilever's slow growth food brands. Let us be precise here.
Slow growth maybe, but they print cash. Unilever gets a 55.1% stake in the new company, plus the massive cash out. McCormick shareholders take 35%.
Stop right there. I know you just read the glossy pitch deck, but did you actually do the math on those percentages?
55.1 and 35.
Which equals 90.1. Where is the other 9.9% of this new global food giant going? Nate?
Wait, is there a preferred equity slice I missed?
I spent an hour digging through the footnotes this morning. It looks like a massive debt financing syndicate is getting warrants to make the math work on that $15 billion cash payment. Plus, some very generous management carve-outs. It is incredibly messy.
Okay, I will grant you the cap table is ugly, spoken like a true former banker, right? Ignore the warrants, look at the synergies, but culturally, separating foods from Unilever's personal care business makes total sense. They have been trying to figure out what to do with their legacy food brands for a decade.
I completely agree the spin-off makes sense for Unilever. It is a masterclass. They get $15.7 billion to go buy high-margin skin cream companies. I am just not sold on McCormick taking on all this leverage to buy a legacy portfolio.
They are not holding a bag, Maya. They are running the table on condiments globally. The pricing power alone with retailers is going to be staggering, and they have plenty of time to figure out the integration strategy.
Plenty of time is the understatement of the year. Did you catch the expected close date?
Sometime late next year.
Mid-2027.
Wait, really? 2027?
3 full years of regulatory purgatory. My calendar does not even go out that far.
That is absurd. 3 years is an absolute eternity in consumer goods. The antitrust lawyers are going to buy private islands off the billable hours on this deal alone.
Which brings me back to my first point. Unilever is the clear winner here. They get cash, they keep a majority stake, and they offload the entire regulatory headache onto McCormick.
I still think McCormick scales up beautifully if this actually crosses the finish line. But fine, I will concede the structure is a beast. Speaking of heavy manufactured structures, are we going to talk about the latest trick in private equity?
You mean Energy and Minerals Group setting up a $5.5 billion continuation fund just to buy Ascent Resources from itself? Yes, we absolutely need to unpack that. Voices.
So the street is officially calling this EMG continuation fund Private Equity's Great Escape. $5.5 billion to basically buy Ascent Resources from themselves.
I hate that framing. It makes it sound like a heist movie when it is literally just a sponsor avoiding a down market exit.
Come on, it is a little bit of a heist. You raise a new fund to buy your old fund's asset because you cannot find a real buyer willing to pay your internal marks.
But they are generating liquidity for limited partners who want out. That is a feature, not a bug. If I am an LP and I want my cash back, I do not care if the check comes from EMG Fund 4 or EMG Continuation Fund 1.
You should care. You are paying fees on both sides of that mirror. It is financial inception.
Okay, fair point on the fees, but if you want a really wild analyst note, look at what they are saying about Primoris buying PayneCrest this morning.
The data center play.
Yes, $422 million in all cash, and suddenly every analyst is treating a commercial electrical contractor like it is an NVIDIA subsidiary.
Hey, if you want to build AI, somebody actually has to wire the building. It is a pick and shovel play. I actually buy the narrative on this one.
You just like the pitch deck. They slapped high-growth data center capabilities on an electrical business, and you are ready to ring the opening bell. I want to see the actual revenue breakdown first.
I am just saying $400 million for a backdoor entry into the hottest sector on Earth is cheap. Speaking of backdoor entries, did you see the Two Harbors drama hit the tape?
Wait, the UWM deal, did it actually break?
Officially dead. Cross Country just swooped in with a $10.80 per share offer and totally blew up the marriage.
Oh, wow. I completely missed that. 1080 is a massive premium. I need to pull up the proxy and find that termination fee.
Pull that up, because next we have to talk about Worthington Steel. They just set an acceptance window that stretches all the way to April 2026, and I have questions. Spill the tea. I am telling you, the cross-country swoop-in is the most aggressive move we have seen all quarter. $10.80 a share just to break up the Two Harbors and UWM marriage.
It's straight out of a soap opera. UWM had the ring on the finger, the venue was booked, and Cross Country just crashes the wedding with a 10.80 cash offer.
You know, UWM's board is fuming. But honestly, I love a good hostile breakup. It keeps the advisory teams awake at night.
And speaking of keeping people awake, can we talk about Energy and Minerals Group? $5.5 billion for Ascent Resources.
Ah, yes, private equity's great escape.
Great escape is a very polite way of saying they are just buying an asset from themselves. A $5.5 billion continuation fund. They're literally moving money from the left pocket to the right pocket and catching a fee in the middle.
Oh, come on, Maya. That's not entirely fair. The limited partners need liquidity. If the IPO window is shut and strategic buyers are hiding under their desks, you manufacture an exit. It's actually a brilliant structural pivot.
Brilliant for the general partners, maybe. I read the prospectus. You're resetting the clock, locking up capital for another 5 years, and taking a fresh management fee on an asset you already own. It's an accounting magic trick.
A magic trick that clears $5.5 billion of backlog. You have to respect the hustle.
I respect the audacity, just like I respect Primoris dropping $422 million in all cash for PayneCrest Electric. Everyone is desperate for a piece of the data center boom.
Exactly. Data centers are the new oil. You buy the guys who wire the racks, you print money.
We'll see if the margins actually hold up. But I want to shift gears to something way bigger than electrical cables. What happens when you mix French's mustard with Hellmann's mayonnaise?
You get a massive $15.7 billion food fight. Tomorrow's radar. I can't get over this energy and minerals group thing. $5.5 billion to essentially buy Ascent Resources from themselves. The absolute audacity of private equity.
Ugh, they're calling it the Great Escape. I call it a fee-generating shell game. You're passing an asset from your left hand to your right hand and charging LPs for the privilege.
Oh, come on. It creates liquidity in a frozen exit market. It's a brilliant play.
It's a mirage, Nate. But speaking of actual drama, watch the SEC filings tomorrow morning for Two Harbors.
Right, because they just officially dumped UWM.
Left them at the altar. Cross Country swooped in with $10.80 a share and completely broke up the marriage.
$10.80 is a heavy premium to pay just to be a homewrecker. I need to see the exact breakup fee on that one.
You and me both. We'll also be tracking Worthington Steel tomorrow now that they've hit their minimum acceptance threshold for Kluckner.
That window stays open until April 2026. I think we have plenty of time to overanalyze that one.